All right. All right. Good morning. Welcome back here to Trader Money. Great to have you aboard. Market opened up a little soft, went down, hit 3,000 on S&P futures, and has bounced right off of that, and has turned and gone green here this morning. So just kind of same old. We kind of have this solid earnings season shaping up, by the numbers, relatively solid, and one where some of the tech fears have been allayed here for a little while. We'll see how that all plays out, but I think overall, you have to look, and we now have enough data to look and say, okay, this is what earnings season is going to look like, and I'll share some of that data with you here next on Monday. But we have enough data to go, hey, even though we have 70% of the companies left to report, we know what the general numbers are going to look like. And yeah, individual stocks are going to look different here and there, but the on aggregate, we know what things are going to look like. That brings some certainty in, and there are some interesting buy spots coming in based on where some of the earnings are falling or slotting in here of late. But let's start off with the challenge. No new entry triggers here this morning, and we've had plenty of triggers here. This challenge, most of them we haven't been able to trade either due to earnings or due to already being in a trade, and so not going to jump in anything right here. Though we do have cash to go get into something. Should something trigger here today. We do have a position on the board with Micron trading here at 325. So let's pop that in. And that takes the challenge back over 3,000, which is nice to see. Hopefully we stay here, here with Micron and get to the profit level here on it. But this challenge took a little bit of a face plant here right at the open, where we got whipsawed on Home Depot and Intel pretty hard. And both of these, had some nice signals come in, some pretty bullish signals come in, and here's Intel, and we get the nice signal, and ultimately we see Intel go up and go up big, but we get this kind of 2-day smash down here at the beginning of October. So challenge shaking some of that off here, and moving on. We do have the majority of companies that are on the challenge watch list. We've either seen report or we've seen a stock in their sector report. So we shouldn't run too into earnings nearly as much here over the next for the rest of this challenge, to be exact. Now, Micron here is we do have a profit level of 48.39. Right now, the stock is trading at 47.60. So we have a little ways to get to the profit level there, and when we get there, we'll adjust the position. Accordingly. Now, it was asked yesterday, what am I going to do with it? Am I going to sell the entire thing, open up another option, or am I going to sell partial? And all of that. I'm not sitting here planning what to do, right? If we come back to the challenge setup, we know, okay, generally how things are going to work, what we're going to do. And there are a few times where we get something where, okay, you know what, I do have to make a decision, like, okay, which option and stuff like that. But I don't sit there and plan out ahead of time, oh, well, if this happens, then I'm going to do this. And if this happens, I'm going to do that. I know, okay, if the options look like this, if there are other trade signals out there to go trade, we'll make the decision here based on that. and go from there. But it's not something where I can give you, well, in 3 days I'm going to do X, Y, and Z based off A, B. All of that is in here. The small things that aren't, those are decisions that are made in the moment. They're made based on the data. They're made, based on, past trades. And, if we come in and we look at, we look at the past challenge, right? And the times where, we hit the average true ranges, we hit the profit target. There were some trades where, just pulled them completely off the board for, a couple reasons. And others where, we pulled the 40%, ran with the rest, and, ran the ATR exactly. And early in the challenge, it's one of those where, do we run it exactly based on our cash needs and things like that? Well, right here, as things sit, right, we don't have cash needs. We have plenty of cash for another position, and so it's not like I have to look at it from that perspective. And so most likely we'll just simply, run it out with the ATR method, but we'll see how it goes. We'll see how it goes. Long way to go. We did hit the red stop date yesterday. The green stop date is the 29th, so not till next week. Here, I believe Tuesday, if I'm not mistaken. Let me double check that. But yeah, Tuesday. So anyway, that's Micron. Now we do have some crossovers going on out there in the market this morning. We have some downside crossovers. Amazon's the only one left on this list. Dollar General was on it earlier, but we have Amazon with the downside crossover. They're coming off of earnings here last night, which we'll talk about. And then upside crossovers, we have Walgreens, Visa, Gold, Disney, Baba. And you'll notice Disney was on this downside list a day ago, Baba 2 days ago, Walgreens yesterday, Visa, it was on the downside list not too long ago, just earlier this week, right? Just being on this crossover list doesn't mean, it's going up or going down. It does have to sort out through the other filters. And as things sit right now, there are no new signals on the board, though I would not be surprised if we see a signal out of Visa. I would not be surprised if we see a signal out of Walgreens. Both of these are two stocks that we could easily see a signal come out of. And then Disney, probably not. We saw the downside 3-7 crossover on it yesterday, and it didn't signal. Why didn't it signal? Because the chance of moving two average true ranges to the downside was a little light. Well, generally when that's the case, it's the case in both directions, right? And we have seen this already with Disney, that it is both of those directions. All right. Now, after the bell yesterday, we saw Amazon report earnings. And I believe every analyst and their dog has commented on it since. Here's the reaction. The reaction is sharply lower, 1780 down to 1618. But since has almost climbed the entire way back, right? And I made a comment this morning that the reaction of Amazon was not what the earnings are. This is a stock that I think you can look at these earnings and go, that is really bullish. But the stock is not reacting in that way. And, we get a few of these during the earnings season, and you can always find the reason why they went down, right? And there are two reasons why Amazon went down. Number one, revenue growth in Amazon Web Services. The outlook for that was cut a little bit. Right? So Amazon cut their growth outlook slightly. It is still a growth monster, but they cut the growth outlook a little bit, and that is one thing weighing on it. And number two, Amazon started spending again. Amazon decided, hey, you know what? Our earnings have been growing, and we've been growing earnings. And if we pull up the earnings per share, you can see the earnings growth has been great here, quarter over quarter over quarter over quarter. Great earnings growth, 40%, 121%, 1,000%, 1,000%, 181%. They've been earning $5, $6, a share, right? Well, this quarter, only $4.23. The earnings contracted by 26%. And you know what? Next quarter, they may not hesitate to do that again. But this is nothing new for Amazon. We have seen Amazon do this before. And it gets investors, it gets analysts, tied up and gets them all grumpy. But if we come back and look, Amazon historically has been brilliant when it comes to spending. The last time we saw investors get incredibly grumpy over Amazon spending was back here in 2014. And Amazon, you could see they would try to climb back, and then they'd have earnings and show the spending, and the stock would drop. And then they'd have earnings again, and the stock would drop. And, investors were looking and going, wait a minute. Are you guys idiots? You're taking the money you're making, and instead of rewarding shareholders, you're going out and you're investing in this thing called Amazon Web Services, the cloud. The cloud's been there. It's done that. There's tons of competition. What are you doing stepping in there? Get out of all the competition. Yeah, you have a little foothold. You've made your point, but it's not a space you're going to be able to compete in, and you keep pouring tons of money into it. And Amazon just kind of laughed. Bezos kind of just laughed. Said, no, this is what we're doing. In the years to follow, 15, 16, 17, 18, Amazon went from a $300 stock to a $2,000 stock. Why? Amazon Web Services. All the money they were putting into this overly competitive space that they're just not going to be able to pay off it to a great degree, and they're spending too much. What did it turn into? It turned into the earnings that we're seeing right now. Well, Amazon, we have seen in a few quarters here, we have seen Amazon come out and start to increase spending again. And where at? Well, in the delivery space, right? In the package delivery space. There's some arguments. Why bother? You already have UPS. You have you have FedEx. You have all these others. Why get into this space? It's overly crowded. There's too much competition. You're not going to be able to make too many inroads there. And what's Amazon doing? They're saying, forget all that. We're making our own shipping. And they have been buying planes. They have been buying trucks, hand over fist. And that's what they're doing with instead of showing bottom line earnings, they're showing expenses on the rise. Doing what? They're investing in themselves. And you say, well, okay, it's fine to invest in yourself, but, is there a limit? Well, take a look at what other companies are doing right now. McDonald's, they're investing in themselves by doing what? They're buying shares. They are buying shares. They're taking out debt. They're buying shares. That's how they're investing in themselves, right? What's that going to lead into long term? Well, is that really a long-term benefit to the bottom line earnings? No. It's a short-term benefit because your earnings per share, you have fewer shares, so obviously your earnings per share go up. Amazon's not sitting there buying gobs of shares, hand over fist here. They're investing in themselves in a way that very few other companies out there are. And if you look at Amazon, you look at, the revenue trajectory, even the earnings trajectory, and then the spending that they're doing and where they're doing it at, and you look at the history of Amazon when it comes to that spending, it's an incredibly bullish story. And, we're talking about a company with Amazon whose market cap is, just shy of $1 trillion, right? They're shy of $1 trillion. But, when we look at this kind of race between Amazon and Apple and, who's going to get to $1 trillion faster and who's going to stay there, right? I think you make a pretty good argument that Amazon might be the first $2 trillion company that is out there in the S&P. And, that's I know that's kind of a bold statement there. Here's Apple. It's at $1.1 trillion, right? With the latest move here on Apple. But, to see Amazon beat Apple to $2 trillion, I would not be surprised. And when you look at how they're investing, it does look pretty solid. Now, does that mean go out and buy it hand over fist here today or anything like that? I think you can go buy a little bit, right? But let's face it, there's still a reason that investors sold it, right? And when we look at 2014, we go back to 2014. It's not like, oh well, boom, they had a downside they had a downside reaction to earnings, so go buy it. It took some time. Right? It took some time to start to convince investors that, look, this is paying off and going to pay off in a very big way. And once they were able to convince investors, the stock had a long way higher to go. So I think this is just one where if you're looking at your investment sheet and say, if you're looking at your trade sheet and Amazon's on your trade watch list, nothing's changed, right? If you're looking from an investment standpoint, you've been looking at Amazon going, okay, it's pretty expensive. All right, we got some tough comparables coming. I think this is one where you start putting it back on that investment watch list and say, okay, we've not been through a multi-year consolidation. Yeah, we might dip a little bit more here, but let's kind of keep a little bit of closer eye on it. Any further dips likely to get bought up, and so to me, Amazon's just one that goes squarely there on the watch list. And if you're looking at Amazon from a big picture market standpoint, you're not involved in Amazon, but you're looking at what's going on in Amazon and saying, hey, you know what, is this bullish or bearish for the markets? It's very difficult to look at that Amazon report and be bearish on the overall markets. You don't see a lot of warning signs in it. Yeah, a little bit of the downgrade of the Amazon Web Service revenue, sure, but it's not that much, and it does look overly precautionary, more than anything. But now you take a look at Microsoft, you take a look at Intel, you take a look at Amazon, you take a look at the earnings on aggregate here. I think you have to look and say, hey, investors got a little bit of relief when it came to tech here this week, and what's going on in tech. Yep, Twitter got lambasted here, and rightfully so. But it's a Twitter story. It's a Twitter issue. It's not a broad-based issue affecting everybody else. It's a Twitter issue. Yeah, it could be a little bit affecting Facebook, but not really. Just not really. We saw from Visa, Visa earnings, which I don't think were, knocked the cover off the ball or anything like that. But, Visa basically is a tech company, right? It's a financial tech company. And, just a lot of the fears calmed. And I think that's what we have seen this week with the tech earnings, Microsoft, Intel, Visa, Amazon, where, some of those fears, some of those, heavy worries have been calmed. I talked about Adobe. I really like Adobe from an investment standpoint, and even from a trade standpoint. We'll see if we get a signal on that anytime soon. Twilio's finally come back down to 100, which starts to make it very interesting. But anyway, that's where we are seeing here. Okay. All right, so running with Micron here. Have cash to trade the next signal. We'll see if we get one come in here this afternoon. There are plenty of possibilities. Shaping up here today, and we'll see where they filter on out. Thanks for hopping on. Have yourselves a great day, and we'll talk to you this afternoon. Take care.